Take a look at that headline there. Consumer inflation expected to have run hot in September, boosted by rent. A couple of things I'm going to point out with that. Today is October the 12th, 2022. And I have to correct myself from something that I said yesterday, because yesterday I was talking about that we were going to get the big CPI report that was really going to help us know what the future looks like for us. And it actually is coming out tomorrow. Today was the PPI report, which is the producer price index. Tomorrow is the CPI report, which is the consumer price index. So the PPI report came out hotter than expected, a little bit higher than they had anticipated, but not really a surprise for anyone because they are expecting these reports to come in a little hot this month, but hopefully begin to cool in the coming months. And that's where the CPI is going to be so important. So back to this report here. Consumer inflation is expected, again, to come in hotter. So the market is already anticipating a report that's going to say that inflation is being persistent. But look at this here, boosted by rents. So they're saying that the housing component of CPI is going to show to be a big portion of why it's higher. Now, us in the housing industry need to pay attention to that, because if rents continue to go up, that makes people still say, well, I mean, rates are a little higher, but maybe it still makes more sense to buy a house and pay that higher payment rather than paying some astronomical rent payment on a property that I don't even own. So with this, where are we as far as our home loan interest rates? The market in general is liking the news that came out today, basically that the Federal Reserve is making comments saying, hey, we're going to continue to be aggressive. So some of the speakers came out and said they're going to be aggressive in order to get inflation down, which they've been talking about. We already kind of are anticipating the CPI report to come in a little bit higher than it was last year. So maybe this is all baked in because the market on the mortgage-backed securities is actually doing well. So we're up 14 basis points today, bouncing off of this floor, which we had been talking about. We don't want to be here, but at least we bounced and did not fall through the floor. So hopefully we're going to run this direction. Now, again, that CPI report is what it is all about. Let's take a look at the 10-year Treasury, also improving for us. Remember, we want the 10-year to go down. It's down 4 basis points, not staying up at that 4.0, kind of bouncing off of it as well. That 4.0 has continued to be an excellent ceiling of resistance and something that, man, oh man, we do not want to break above 4%. But guess what? We're right there. Tomorrow's report is going to be very important to us. So the home loan interest rates right now, how are they liking it? Let's move over to the Brent Bruce Daily. We'll pull up our loan sifter here and take a look at what a very, very well qualified, I mean perfectly qualified client today would be getting as far as a 30-year fix with no points. So let's run the Brent Bruce Daily. And we are looking at 6.875. So interestingly enough, a little bit better than yesterday. Okay, so we see a mild improvement, but yet we're seeing an 1/8% improvement in the interest rate. And again, in my opinion, it's just that the general consensus of those that are looking into these things feel like this information is kind of already baked into pricing. So they're already anticipating these things. And so far right now, for us to be at 6.875, only hours away from the CPI report coming out, kind of surprises me. I thought we might be pushing up into the 7s later here in the day, hedging their bets for possibly having the CPI report come out with a surprise and having interest rates jump higher more quickly. But right now, the market is kind of telling me that the banks are thinking that we're going to see improvement. And that's what I was talking about the other day, that this may be the turning point. This may be the peak of what we're seeing, and we may start to have reports come out that allow us to see improvements to our home loan interest rates. And if that is the case, I will be really happy for multiple reasons, but also because I had said that we would not go into the 7s, and if we do, that we would bounce back quickly. This is definitely, tomorrow is going to be one of the days to where I'm either going to eat those words or I'm going to kind of get to smile a little bit at that prediction. So we sure we'll see. I will keep you posted and let you know when that CPI report comes out, which way the market is running. Talk to you again tomorrow. Have a good day.